Welcome to our podcast From the Ground Up, where we interview startup founders exploring their journeys, their challenges, successes, and lessons learned. We hope you'll be inspired in discovering what it takes to build a thriving startup. I'm your host, Jake Aaron Villarreal, and excited to have with us today Paul Koullick, founder of Keeper, a San Francisco-based startup that went through Y Combinator and raised $15 million in funding. Paul, welcome to the show.
Thanks, Jake. I'm excited to be here.
Great. Well, Keeper is a startup that's raised $15 million in funding. It's the first AI-based tax filing software. To date, Keeper has helped over 1 million Americans uncover easy-to-overlook deductions and file their taxes. Paul, I love the product and the solution. Before we dive in a little bit on what problem you're solving, let's talk a little bit about you, just so that people that are listening and other founders potentially just have a little bit more insight about you. Where currently do you live? And then give us kind of the day in the life of what it's like to be you.
Yeah. What it's like to be me. It's such a, it seems like a simple question, and it's, people are so different. It's everything's relative, but yeah, I'll start with a little background on myself. I think it's helpful. So I live in San Francisco, but my background is, I'm Russo-Ukrainian, I guess, genetically, but I grew up all over the world. I was born in Japan. I grew up in the Netherlands, and then my family moved to the States when I was 11. So growing up, we were not particularly well off. I think my parents, they prioritized my education in a disproportionate way. They paid for a private school. But like a lot of immigrant kids, I was always a bit of an outsider, both culturally and financially. So I think that background, taught me that I needed to work hard. It taught me that I felt like I always needed to prove myself. That environment led me to Harvard, product management, and eventually to building Keeper.
That's great. You mentioned Harvard?
Yeah.
Great. Yeah. It's such a great school. And, it's funny, just the other day I was looking at like the top 10 most wealthiest people in the world. And I think 3 out of the 10 came from Harvard. The other 3 came from Stanford. And, there's a lot to say about education and kind of where you go, the network you can build.
Probably selection bias, right? The wealth is generational. I don't know. I don't know how many of those folks were self-made, No, well, thanks for saying that. I really don't think that's the institution. I think one thing Harvard does really well is they focus on, as much flack as they get for doing, for letting money influence some of, at least half of the people that they allow to attend the school. The other half, they do a good job, trying to find people who otherwise couldn't afford it. And I was, really lucky to be part of that other half. So
yeah. Well, how did you go from Harvard and then getting into the startup community, the startup world? What was your path to get into really building technology?
Yeah, it's a great question. I think that for me, it always felt obvious. I grew up believing that I wanted to be a businessman, whatever that meant at the time. I didn't know what that meant, but I felt it in my bones. And I think ultimately what it was a sense of, complete and earnest authenticity with my work. I wanted to feel like I could put everything into my job and get rewarded for that. And I think initially I started off, working for others and finding that at a certain point, you don't get rewarded for additional input. And there is a limit to how far you can go there. And so I think eventually 5 years into my career, I made the leap, and it felt very natural for me at the time.
Are you a programmer by background?
I have a degree in computer science, but I wouldn't call myself a programmer. I'm always sort of tech adjacent or programming adjacent. Yeah.
So you go through college, you get your degree. Walk me through how you started to get into building a startup. And I'll make the assumption that Keeper isn't your first startup. I could be wrong, but walk me through that.
Yeah, Keeper was my first real startup. I think that I was always, so Keeper is a tax company, and I don't have any sort of relationship with taxes, you would think, but taxes always attracted me because there's, how do I put this? There's something about like defending the little guy when you're doing individual tax prep, and that always spoke to me. I grew up in my parents grew up in the Soviet Union, and so there was always this sense of I would say, a healthy distrust of authority. Just because, if you grow up in the Soviet Union, you can't pay all of your taxes. Like, you could not afford to eat and pay all of your taxes. You have to pick one or the other, right? And so there was a sense of like, if you're smart, and there's this expression, like the only people who pay all their taxes are the ones who can't afford to, in the Soviet Union. And so I think, obviously, the United States is different. And I think our laws are much more reasonable here, but to some extent, the same is true. And I always felt this deep-rooted emotional, defiance towards that injustice. We have a very complex tax system here in the States. And unfortunately, that favors people who have the resources to navigate it, right? The people who can hire a great accountant who can explain what loopholes they can claim and which ones they can't. And that's how it works. And it's, it's capitalism. It just makes me frustrated, and it makes me especially frustrated when I see demographics of hardworking people who often have multiple jobs, people who work what you might call gig jobs, under optimizing their tax situation and paying thousands of dollars more than they should be. That's what got me into Keeper in the first place, was this anger over how that part of the system works. And I came to the realization that you can't solve that problem with online articles. You can't solve that problem with school. You can't solve that problem with anything except technology. You can't solve that problem with labor, right? It's too expensive to try to, human services are too expensive to deploy against that problem. You have to solve it with tech. And that's what Keeper was. That's how Keeper started, was an attempt to solve this particular niche, this particular complexity within our tax code, which is called tax-deductible business expenses, through technology.
How big is that market?
You'd be surprised. There are 60 million households in the U.S. that have some sort of 1099 contracting gig income. About 5 million of those are going to be your traditional business owners, what people think about when they think, business income. But the rest are people making ends meet. Sometimes they're freelancers, but they usually have some sort of W-2 on the side. Sometimes they have 2, 3, 4 different jobs. So it's a huge market. It's a huge and overlooked market that I think in the tax world kind of gets bundled in with these traditional business owners. And that's part of the problem that we're solving at Keeper.
I hear gig economy and I hear gig workers. I think Uber drivers. I think freelance designers, people that are doing a side hustle that, add a couple extra grand a month. You kind of forget about your expenses in the process when the year goes by, because it's not your full-time job for the most part. Sometimes it is. I did a little research and just for how the finances are, I guess, defined as terms of gig economy. 2018 was, I think, roughly 205 billion in revenue generated from freelance and gig economy workers. 2023 is roughly in the 450 billion range. That's a lot of growth. A lot of people, YouTubers, online artists, creators, making a real living. Your product helps them how?
So these people, as you said, often don't realize or wants to track what are called business tax deductible expenses. So in short, these are people who are considered business owners by the IRS. They get taxed more than people who have W-2 income. They actually pay an additional 15% tax that is independent of income bracket. It's horrible. But the sort of silver lining is that they can rightfully claim that a bunch of their things that they buy are actually business expenses. The tricky part is that part of the tax code is complex to navigate. You can imagine that if you wanted to take advantage of it in a not so honest way, you could, by claiming everything you buy is for your business. So the IRS has set up a bunch of little gotchas, little tricks like, oh, you shouldn't claim over this many business meals, and you shouldn't claim a home office that's more than 25% of your home overall. These are audit flags that will get you in trouble. And so that sort of a combination of factors, the fact that these are important to claim, but also it's a minefield, make it an area that people tend to skip over or under optimize. The way to really claim this historically because you're right, the types of 1099 income is so broad. You might be a scorpion catcher in Arizona, or you might be a food creator on YouTube. So there isn't a cookie cutter model for what you can write off. So you would have to go to a human, you would have to go to an accountant and get their seal of approval. And so historically, this was very difficult to do. What we're doing is we're using intelligent software, AI, to basically do what a human accountant would do if you walked into their office. So we start by asking you a couple of questions. What do you do for work? Great. You're a scorpion catcher. You work from home. You drive to meet your clients. Makes sense. And then we ask you to connect your financial account. So whatever you use to make your purchases throughout the year, credit cards, bank statements. And this is all, obviously, we're sort of standing on the shoulders of giants with the Plaids of the world. So it's very easy to do that these days. And then we use that combination of data to intelligently scan through all of their expenses and tell them which of the things they bought are actually tax deductible. And so that's a really exciting experience for a lot of people. It's a sort of show not tell value where people are, it's our magic moment. It's this feeling of like uncovering the write-offs that that you had no idea you could claim. It's very empowering. It's this feeling of you're on the other side of the table now. You're the man, right? You're taking advantage of the system. You're writing off part of your rents, and you're doing it rightfully. You're doing it. You have every right to do that. And here are the exact rules and why you can claim a desk in your bedroom even though it's not a separate room. Here's the legal precedence that makes that okay. We are. One of the things that always made that hard is it required a human's time. AI has infinite time, right? Or it's very cheap. And so it can take the time to explain every little thing to you and make you feel safe and help you understand the tax code in a way that was never possible before.
I love the fact that you can do it with a phone, and you can get the alerts. I mean, I didn't know much about your company. I did a little research, went to YouTube, saw some commercials, some ads, and, every day we're spending money as a company. And I can tell you that manually, if I'm not tracking it, or at least thinking about what do we spend last month, or looking at my credit card every month and doing an assessment of where our spend is going, if I got a text, I'm looking at this text every day. And if I can just respond and it's organized and, structured in a way that I don't have to do the work, that's really a no-brainer from my perspective. You mentioned AI. AI has gotten so much press in the last 6 months and probably has in the last 30 years.
Yeah.
You started your company before ChatGPT came out, or at least was publicized.
Yeah.
How does AI really impact your business? Is your platform completely built on AI? Is it integrated? Walk me through that.
It's funny. Even 2 years ago, I would have hated to hear myself describe us as an AI company in some ways. I've always been, I guess, in the range of founders, I've always been a bit allergic to the jargon side of things. I sort of never. Well, it's a weakness, and it's it is what it is. I've always stayed away from crypto, NFTs, Internet of Things, whatever. I've always wanted to just create value, and exchange that for revenue. That's always been the goal. So in many ways, we didn't used to describe ourselves as an AI-based company, but enough in the world has changed, I would say, over the last 2 years that intelligence that we were doing before, which was AI, but sort of we would just smart software, like do what you will with it. We now, I think, rightfully call it AI because so much is advanced. I mean, LLMs are so powerful. A lot of the technology that used to limit our ability to do holistic tax advice is not quite achievable. So the way you asked the question about what part of the process is AI. So our company, I think, like a lot of other companies in the space, is like 80% infrastructure and 20% magic. And it's only the quote unquote magic that AI is helpful for. Most of the work is still, okay, get the bank statements, identify which of these are recent transactions, pending versus actual transactions, clean up the merchant name, categorize it. You only need AI when you have, I guess, the intelligence is only as good as its inputs. And so you have to prepare the inputs for it And so there is this moment where I would say if you're trying to build with rules-based software pre-AI, it was very difficult to do that last step, the prediction step. Someone is commingling their expenses. Should I recommend that this trip to Safeway was actually a write-off? Well, it's really hard to know because it depends on, is Safeway a gas station in the state that they live in? And if it is a gas station, do they drive for work? Would they be able to claim it? Oh, they do. Okay, have they claimed Safeway as gas before? Other people in their region, do they claim Safeway as gas? So there are so many. To try to build that as a rules-based system is an almost impossible task. But even the current state of which is still fairly limited of quote unquote general AI can handle it, where it can handle it at the level I would say that a human accountant can do it, which is fairly high. There's still a limit. You can't you can't know the unknowable, but you can get to the level of a of sort of an H&R Block account.
So if you are a business owner and you've got QuickBooks, for example, and you run your financials at the end of the year, you go to your CPA, you got to provide them all the data, and they're going to do your taxes. Where are you at in that spectrum?
Yeah, great question. Yeah, so I would say, when I broke down the market for 60 million households, 5 million of which are real business owners, quote unquote, right? They take it seriously. They do business accounting, and that's what QuickBooks is. And so it's actually a very well-established and great market. There's a lot of tools available to you if you're willing to put in the work. So if you're willing to spend your Sunday night, categorizing, and you're willing to do the research to tell a platform like QuickBooks, this was a write-off and this was not, then then that's great. And there's a lot of alternatives for you. The part of the market that we're focused on is the 55 million. It's the much bigger and much harder segment where they don't want to do business accounting. They don't, if you told them, oh, this is a business accounting tool, they would say, no, I don't need that. What they want is to get more money back on their refund, right? That's what taxes are. Is once a year I I either get some money back or I owe the government. And I would like to reduce that or get more money. Like that's what taxes are. And so where we fit in is we meet them exactly where they're at, and we put write-offs in context of that greater goal rather than treating it separately from, traditionally you have like bookkeeping services and tax filing services, and you need both, and they're separate. And so one of our big things is that we sort of get rid of all that ivory tower mentality. You don't have to have a separate bank account. We don't expect you to pay quarterly taxes. We don't expect you to know what's a write-off and what's not. We meet you exactly where you're at.
There's another company that we work with called Beacons. I'm not sure if you heard of them, Beacons AI, and they actually cater to the gig economy, online creators. And they've done a tremendous job of growth and have millions of customers. But it sounds like a really good collaborative opportunity potentially with them. Just if there's any sort of introductions that make sense. I mean, I'm just thinking about, we're in the startup space. We work with lots of founders, lots of companies that are innovating, and there's so many that are building products that there's like affiliation relationships that probably would be very helpful for both parties, right? You're both solving the same problems, but with different technologies.
Yeah.
So I always love to hear, different areas within the business world that you're solving problems that business owners go through, but they're not sure when they're going to get there where they need products like yours.
Yeah.
When you went out and started your company, most companies build a product, they might get some users, they might go through an accelerator, they raise capital. In the last 5 years, a lot of companies raised a ton of money. A lot of them are out of business today. What was your strategy in raising capital, and how is that ahead of the curve in today's world versus many other companies that are no longer around?
Yeah, I mean, hindsight is 2020, and it's tempting to make it sound like we were savants. We were not. I would say in some ways we were just scared. We were just, I think so. We were a YC company, and I think one thing YC does very well is that they instill, the right level of paranoia and fear into their companies. one thing they do very well, for example, is they talk about how you don't have product market fit until your customers are sending you cupcakes, right? That's like a classic line from Patrick from Stripe, right? He's like, you don't have it. Like, you think you have it, you don't have it. And unless they're knocking down your door and you're accepting cupcakes, like you're trying to like force a manifest destiny, and at some point that boulder is going to come rolling down back down the hill. And so we were very conscious of that attitude, and we were quite scrappy because of it. I think that we were 4 people, well beyond 2 million in ARR. We had raised $15 million. We were 2 million in ARR, and we were just 4 people. So I think in my mind, part of it was about trying to have sort of a long-term perspective. Like, my goal is not to hire a bunch of people. My goal is to build a great business. And do I need, because every time you add a person, you add overhead, you add communication overhead, you add misalignment overhead, and like, it doesn't equal, +1 doesn't equal +1 on productivity. It starts to flatten out. And so we've always been very conscious of that. When we did raise 15 million, it was 2021. And I guess, again, in retrospect, it sounds nice, but in many ways, we also bought into the hype, and it was impossible not to. I mean, we were like, okay, we gotta hire a bunch of people. It's time. And so we did do that. We are 25 folks today. We just so happen to be building a business that makes money. This is, again, probably a bit of the paranoia and fear that was instilled in us by YC, and maybe is generally what we have is we never did the thing where it was like, oh, revenue doesn't matter. It was always, at the end of the day, we felt like revenue was a manifestation of value. It was a reflection of the value we deliver. And so if customers are not paying us, then what we're building may not be valuable. The one way to prove that it's valuable is that they pay us. And so that was that's probably the reason why we didn't hire 60 people, and that was the reason why we are on track to be, 11 million, 12 million and cash flow positive by end of this tax year, is because maybe a combination of that paranoia and a little bit of like first principles thinking. But it was not easy at the time. I don't mean to make it sound like we knew what was going to happen. We had no idea. We were just, in many ways, we were looking at these other companies and thinking like, we're behind. They're able to. How were they able to hire 60 people so quickly? So I think it was. Yeah, I think it was. I was also extremely paranoid about hiring the right people. I mean, the amount of like energy that I put into, I would do, especially for senior hires, I would do maybe 8, 9 reference calls. I mean, I was like a detective. Like I would identify a thing that I was a little bit worried about. Like, okay, this person seems really great at these things. I'm a little worried that they're gonna, there's gonna be tension around people management. I don't see people management in their short-term horizon. I'm worried that they might have an ego thing where they want to push in that direction. So I would sort of like a dog with a scent. I would chase that trail. I would talk to all their reference. I would really poke on that. I was just so worried that we would hire the wrong people, having been at other startups where I felt like sometimes I don't want to say bad apple, but one misaligned hire can really hurt the culture of the business. So for that reason, we hired very slowly.
Yeah. Well, congratulations on taking that approach. I think, a lot of companies are looking at that model today, and even ones that have raised a lot of money and have had to downsize, they're looking at, how they move forward. It's about, generating revenue and profitability, and not how many people you have on the books. Yeah. Is it sustainable? So those are all great things. Hiring is a tricky problem. You got to understand what you are and what you want, and then go out in the market and hopefully you find those type of people that fit what you want them to do, the core skills you need. Do they fit your culture? Do they align with what you're building? What are some of the insights that you've learned? You haven't gotten it all right, hired, fired. What are some of the insights you've learned that have really helped you identify and make sure you've got the right people on your team?
Yeah, that's a great question. So my favorite part of an interview process is always towards the end, where I very purposefully create an environment that is bi-directional. So what I mean by that is that final call is always goes, not the final call, the sort of pre-offer and then post-offer experience always goes something like this. Listen, we're in the same boat now. Like, you're incredibly impressive. You have all the opportunities in the world in front of you. Let's talk about whether you'll be happy here. Let's figure out if this is the right place for you, right? Like, here are the things I'm worried about. What are you worried about? And we sort of go through that process. It's like an anti-interview, right? And I spend so much time with them at that point. We get breakfast. We go for a walk. I really make it clear to them, which I think the more senior you are, the more you realize this already, is that this is years of your life, and you don't know us yet. You have no idea if I want this to be a success for you as much as I need it to be a success for us. And that process is, I think, very very important. A lot of people are, they sort of treat an interview process as like, well, my job is to get the offer and then I'll think about it. And they don't really, once they get the offer, they're tired and they just kind of like don't do the second step of thinking about it. And I found that to be very dangerous. So I've always forced that to happen, sort of independent of we're sort of, we can make the offer, but there's always time to have another conversation, to have you meet this person, to really dig into what kind of people management opportunities there exist, like that kind of thing.
You've been in business how many years now?
Been 5 years. Yeah.
Okay. You got 25 people. What's the culture like today in the company? Like, if you're outside looking in, you hear this story and it sounds like a perfect fit for what you're doing and they want to be a part of it. What do they experience there? And what is it like to work for you? And why is it great to work for Keeper?
Yeah. So those original 4 people, right, that for the first 3 years, we were just 4 people. We all came from other startups. We all saw other versions of what it could be like to build a small business. And I think we all, for that reason, were very intentional about the kind of environment we wanted to create. Some of the things the values that I think are evident for anyone who joins, the kind of feedback we get, a week after they join about things that they weren't expecting, is just how I would say psychologically safe an environment we create. We work a lot on making sure that people have information at their disposal, that they have a voice, that they are, that we don't ambush people with sort of meeting culture. So one of the things that we do a lot of, for example, is this is going to sound super boring, but I love it very much, is documentation. Doc culture, where you have this kind of expectation to write down your thoughts ahead of time, share it beforehand, leave comments, and then discuss the comments in live, I think goes a long way to create that sense of psychological safety, to make people more efficient, to avoid wasting people's time in meetings. We have a very intense doc culture. And that was a kind of an outcome of having seen what happens as companies scale, from, I guess I had been through all the way from Series A's through Series E's before this, and seen, what things scale like at those different stages, and seeing, politics do start to happen once you get to a certain point, and seeing how to make sure that you're not feeding that cycle.
Yeah, that's great. I think, messaging is really important, when companies start to grow, when you have hiring processes in place, and, as the founder, as your 4 founders, you might have a different message of why it's great to work for your company versus the hiring manager that's interviewing maybe for the first time, and aligning that message, making sure everyone's on the same page, in sync, can get, diluted pretty quick. What are the things that you do to ensure that everyone's kind of on message when it comes to building your team?
Yeah, that's fair. It's a good question. So I work with the hiring manager to give them the pitch. I mean, good candidates, one thing we learned about good candidates too is they need information up front. They're not going to just take a leap on some random, if they don't know us, then of course they're going to assume that we're just another, random startup. So we the first call is always pitch. And it's an earnest pitch, right? It's, here's what we do, here's why we do it, here's why we are excited about the future. And so I do coach every hiring manager on exactly how to do that. Sometimes they apply their own flavor, but a lot of the time it's like, my job is to do the pitch. I've had a lot of practice, and this is a good formula for explaining what we do. So they'll just sort of adopt it. So that's the first step. I would say from there, I think it's okay for different hiring managers to have different cultures. Sorry if can you hear that background noise or no?
Yeah, no problem.
Okay. My CTO, for example, is a much more kind of buttoned up personality. A much more like bring your work personality to work, and I don't need you to be my friend kind of persona, which I think is actually very respectful and great in that environment. And then my product lead is very kind of vivacious and wants to wears his heart on his sleeve and all that. And so I think it's good at that point to bring in your personality, because ultimately a person joins for their manager. So I do encourage that. And then towards the end of the process, I'm involved every time, right? So I always have that call. I spend, sometimes it's multiple calls with every candidate because it's that important. Oh.
Some companies today are focused on, COVID's gone, it's time to come back in the office. There's a lot of debate. What's right? What's wrong? I don't know if there's an answer. What's your answer for that?
Yeah. So our answer is, we're so small enough where I think you have to be in the, we gain a lot from meet space, from being in the office. So we do require that every new employee is in the office at least for the first year. We make certain exceptions after that point. So we do have a few folks who are remote first, but most of the team is in San Francisco and, comes in at least 3 days a week. So.
Yeah, trade-offs both ways. And like I said, there's no right or wrong answer, but I think that's great. You at some point you got to put your foot in the ground and say, this is how we do it. If you're a fit, you'll be part of how we operate.
Yeah. I think that I'll be honest, I think it's tricky to hire, I guess it is easy to hire young people that are willing to move cities and, and just come in every day. It starts to get trickier and your pool starts to diminish quite a bit if you're looking for more senior exec types who are already living in the area and already able to commute and all these things. And so that's where the real trade-offs come into play. I think, as we're on our journey and we raise a B, I think that at that point, we'll have to think about it again, because I think up to this point, it's been very easy to be in person. But I think, at the Series B plus stage, when you continue to need additional types of leaders to join your organization, that's where the bigger trade-offs start to come in my mind.
Yeah. Funding is tricky. It's, you've succeeded. You got the $15 million. You've got, a large amount of AR coming in. So financially, it sounds like you're in a good position. I always love to ask the question, how many times did you have to pitch to actually get your A round?
Yeah, it's a great question. So I'll start by talking about our seed round. Our seed round was so easy. It was crazy, right? I was on top of the world. I was one day after demo day. YC is an incredible kind of, accelerator in both meanings of the word for that. And then the Series A was very hard. I think that it was 2021. I mean, there was every reason in the world for it to be easy, but it was very difficult. And I think we did about 70 top of funnel conversations. I think that, you probably hear this a lot, about 3/4 of the way through, we were almost like, you know what, that's fine. We don't need to raise money. We can build this off of our own, off our own revenue, and basically gave up. And then and then at that point, I think something maybe changed, something clicked, and, folks started to buy in. But it wasn't easy. I think that, you learn a lot from that hardship. I think you do in many ways. The business we're building is, let's just say there's a graveyard of other companies that have tried to build in the model that we're doing. And it took work to convince those people who are with us today that we're doing things differently, and we figured it out, and we, because you're, especially during a Series A, the we figured it out bit is a very tricky balance, because the truth is you haven't figured it out. You figured out some of it and you have a confidence that you have more than 10% chance of figuring it out. Right. Which is a little bit of a different, yeah. So anyway, it was hard. And you learned a lot, or I learned a lot. But yeah,
Well, congratulations. That's really great to hear. We hear numbers that are pretty crazy, and I think on the outside looking in, you would never think it would take that many presentations. We've talked to people that have, they put a list of 2,000 investors to target together, and they've,
wow,
on presentation number 150, and they're still, in the process, and some get the funding and some don't. But
wow,
I do
yeah.
think you learn a lot. I think your story gets better. When you first started your company, and the thesis that you had, has that changed? And have you had to make any major pivots between where you started and where you're at today?
Yeah, that's a great question. Let me actually double click on the comment you made previously as well. The comment about your story gets better. So I want to clarify what that means for us, because one way to interpret that line, I think it's a very wise sentiment, but I think one way to interpret it is like, oh, you pitch better, you like explain it better. I think that's only a small portion of it. For us, a lot of it was I became more resolute in my understanding of my business because I was getting pushed around so much, because I was constantly getting, what about this? What about that? I finally got to a point where I was like, you know what? You're right. I don't know the answer to this, but here's why, here are the reasons not to invest. And here are the reasons, here's what you need to believe in order to join us on this journey. And that only crystallizes after a lot of pain and a lot of no's, having that sort of sense of, you know what, this isn't for everyone. And so that part of, telling your story, I think was really important for us. That part of the telling our story is that we're a direct to consumer business that has, a long way to go before we get to the kind of retention that like a TurboTax has. And so sort of convincing investors that, and ourselves, frankly, most importantly ourselves, that this is how we're going to get there was a really part of that journey, really big part of that journey. With respect to whether we pivoted, yeah, so we've gotten a little bit broader. So we started off as just focused on gig workers, and one of the sort of realities of of building a business that wants to be cash flow positive, you have to think about the relationship between your customer persona and retention. And we sort of we had this mentality for a long time, maybe for 3.5 years, that if we just build the right features, if we just do the right kind of product changes, we can retain these gig workers forever, and they'll keep paying us $168 a year, for the rest of their lives. And eventually we got to a point where we learned that, what, maybe that's not realistic. Maybe someone who earns $30K a year shouldn't be paying 168, and we just can't make that math work. And so we got to a point about 1.5 years ago where things really clicked, and we realized that we can continue to serve gig workers, and we can offer like tiered pricing to make it affordable, but we need to also go up market, and we need to sell to the kind of customer who values their time more than their money, and and is willing to pay. We now have a plan for $192 and another plan for $3 a year, right? And we love to sell to customers who were previously getting ripped off and paying $2,000 for an account, because it's unbelievable how many people there are like that who are middle class Americans. And so that we sort of stepped into that segment, and that change of segment also changed our roadmap quite a bit. It made us kind of go from an app that, when we would market ourselves, it was essentially some version of free money. It was like, link your bank account, answer a couple of questions, we'll add $1,200 to your refund, was the pitch. And then we had to mature. We had to serve a customer who was a little bit more, savvier and all that. So we updated our visuals, and our messaging is much more holistic now. It's, the first intelligent tax filing software. And yes, we'll automatically identify your write-offs, but we'll also keep you safe from audits. We insure all these different things. We, have a human reviewer sign your return at the end, all those different things that attract a sort of higher LTV customer.
Really cool to hear that. As we kind of wrap up here, I have a few more questions for you. As a leader, as the one that's kind of guiding the ship, it's lonely at the top sometimes. You don't always have the insights about your own employees of what's happening, and how do you always keep that line of communication open? But sometimes you just need a sounding board. Sometimes you get a coach. Sometimes you have just a third party you can talk to. What works for you? What's your strategy there?
It's a great question. I have so absolutely it's lonely at the top. Or maybe, maybe not. I have a co-founder, so I think that helps first of all. So we share that burden. We are fully transparent. And so I think that was always important to me. We're 50-50 is always important to me. I understand that certain founders feel like, one person has more experience, and so it should be 70-30 or whatever, or 60-40. But I always felt like this is going to be a hard path, a hard journey, and let's be 50-50 to reflect that. And so I think that's a big part of it. I think that I have gone through and worked with coaches as well, and some of them better than others, but I haven't sort of found one long term. And then, having a life outside of work, or at least relationships outside of work, I think is also the quote unquote trick. So my wife is, we got married about 6 months into to journeys. I locked that in, and now she's, she's seen it all. We she knows the struggle. So I think that's a big part of it as well.
Really cool. I want to wrap up with the insights of the day in the life of you, Paul. So give me the 1 minute chronological. You wake up at this time and you do all these tasks. And at the end of the day, you're closing the door, going to bed at this time. What's that look like for you?
Yeah. I mean, look, I've never been the, sleep 4 hours maniac type. I sleep a lot because I think that quality matters more than quantity. So I sleep. Holy cow. I'm so sorry, Jake.
No problem.
All right. So I'm going to redo that. So yeah, look, I wake up at 7. I have found that I have to exercise every day. I keep going through these stages where I try to convince myself that I don't have to, and then I become frustrated and sad, and I realize that yes, I do. So I do exercise every day. It's either swimming or running. At that point, I work from 9 to 7 usually. I think that it used to be more. I think I used to be maybe 8 to 8. But I've learned I've learned that there are ways that starts to bite you that aren't healthy, that are actually worse for the business. I find that if I have a prolonged period of time where I'm working a lot, I also get more touchy. I get more sensitive. I get more angry, and that causes other issues in the business. And so I have a regimented schedule. I don't actually deviate off of that schedule. I don't work after, late at night. I sleep. That's also working, right? I need to be fresh for the day ahead. During the day, one thing I found, we're 25 people, so it's certainly different at different stages. But one thing I found at our stage is that my job changes a lot every 3 months or every 2 months, maybe. I'll basically deep dive on a certain part of the business. So I might, during a given 2 month stint, I might be extremely focused on product management and, digging into those processes and fixing some of those issues. And then I might switch over to our marketing team. So kind of embracing that my job is not, regular in that sense. But then outside of that, I have my one-on-ones with my, reports. A big part of that is I usually do those on Fridays. We do those in person. In person, I think really matters. And those are really, really important. I actually prepare quite a bit for those to make sure that they're effective. I used to do one-on-ones where it was just, let's catch up. But I found that it's good to have that personal connection, but it's really important to maximize the value there, to really push on the things that need to be pushed on. So that's the day in life. I come home. I actually am the one who cooks dinner. My wife is, she does other things, but I always cook the dinner. So I'll cook food. We'll have a sit down dinner, and we'll go to bed around 9:30, 10.
That's great.
Yeah.
I think the thing that sticks out to me of everything you just said there is the sleep and the requirement for sleep.
Yeah.
And especially when you're stressed and you're just building companies and going through your daily family life, sleep can get away from you. And
that's right. That's right.
It changes your energy, and it changes how you operate and how you think. And I think it's so undervalued in our society that, I love that answer. Yeah.
Productivity is not linear. I mean, this is something maybe when you're 4 people, it is, but it's so difficult you can't map hours spent to output. So much of the time, especially when you have a larger team, your job is to make other people more productive, and figuring out how to make other people more productive is an art, right? It's tricky. it requires being well rested, frankly. And I often I find myself very comfortable being busy, right? And so I tell myself that, oh, well, I'll pick up an individual contributor task and I'll just, slam my head against that for a while. I think there's value to it, setting an example. Sometimes there are tasks that are uniquely, like cross-functional that the CEO needs to take on. But a lot of the time it's actually not productive. You're feeling productive, but you're actually the opposite of that. You're kind of just pantomiming, going through the motions.
Yeah, I totally agree with you. It's cool to hear you say that, because it's easy to feel productive, but if you're more strategic about how your time's utilized as a leader, you could do 10x, the value of what you're doing in the company at that point in time. The fact that you said you evolve, or you kind of have a new position every couple of months, 2 or 3, that to me is really insightful, because you have a title and you have certain characteristics and requirements to kind of run the company, but I don't think people put too much attention to how much you have to evolve and adapt as your company's adapting.
Yeah.
I think it's critically important to do that and be aware of that too. So really cool to hear you say that.
I spent about 4 months just being a social media advertiser at one point in the business. And I remember thinking, I was like, okay, am I going too deep? But as it turns out, that is a really important skill set for the business. And that experience helped me hire an incredible, division owner who I would not have been able to hire had I not had a hands-on experience. So I think it's tempting to say, well, I'm the CEO, I need to delegate everything. And it's a tricky balance between those two.
Yeah. Yeah. Well, Paul, it's been a great experience hearing your story and understanding your journey. It sounds like you've done a lot, but there's a lot forward moving. What's next for your company? What do you see on the horizon as you look into the next, 2024, 2025?
This is a very exciting year. I think the world has woken up to the power of more general intelligence. I think that the way that our product works is going to rapidly change and has already rapidly changed. And it's really exciting to be on the bleeding edge of that. I also am excited just from a financial standpoint of getting to a stronger position, right? Let's get to 12 million in ARR. Let's get cash flow positive. Let's, at that point, if we want to raise, we can raise, and that's great. And we don't have to be at the sort of mercy of the capital markets if we don't want to raise at that time. So I'm excited for all that. I think that, I think that those are the macro things that you think about every day as a founder. And then the little things are good to remind yourself of, that, your childhood friend who actually downloaded your app and didn't realize it was your app and is immensely grateful for the service. Stuff like that sometimes is the real thing that gets you up in the morning. So
yeah, that's great. If people want to find you or find Keeper, Paul, where do they go?
Keepertax.com. You can find us on the App Store, Keeper. And you can reach out. We're not, especially if you're someone who we're hiring for engineers, we're hiring for really any smart, talented person looking to join a 25-person team and excited about our mission. So reach out on LinkedIn or just paul@keepertax.com.
Cool. Paul, thanks so much for joining our program today. And for all the listeners that are listening, appreciate you, and thanks for spending your time with us today. Look forward to catching up with you and in the future, Paul, and with all our listeners on the next episode. Have a
Thanks,
great day.
Jake. It was really fun to be here.
Connect soon. See ya. Before we wrap up, I want to give a big shout out to all the entrepreneurs that have joined to make this podcast possible, and for all the listeners for listening. It means the world to me that you chose to spend your time with us today. I'm your host, Jake Aaron Villarreal, signing off for now, but can't wait to connect with you all soon on the next episode. Take care. This show is sponsored by Match Relevant, a company that helps venture-backed startups find the best people in the market, and they do it in 3 simple steps. First, they sit down with founders to understand their story. Second, they tell their story into multiple candidate channels. And third, they schedule interviews within 48 hours. Find us at matchrelevant.com to learn more about how we do it.